Hi guys, thanks for tuning into another episode of Nuggets News, or our monthly crypto mining update with our friend Will from MiningStore. How are you today, Will?
Very well, Alex. Been a very exciting month. It feels like every month on end we're just going, it's exciting, it's exciting. But just before you started the video, both you and I are going to be watching that price. It looks like it could be touching 20K.
Yeah, you've got in the background there for us as well. But it feels like not that long ago when we were under 10K and we were even talking about the idea of break even price for the miners, and it seemed just so high to say that they needed to go to 16 and 17K, and here we are just knocking down the door at 20K.
After that, like Bitcoin halvening, and we were looking at the chart, and you've just got this massive gap between where the profitability is. It just didn't seem like it was around the corner, but here we are now, and we'll touch in that on this episode. There's profit in the works right now.
Absolutely. Well, mate, let's dive into these slides, and we should start off by mentioning it is the 1 year anniversary. So I think we've done one every month. We might have been a little bit early sometimes and a little bit late other times, but we have done, I believe, 12 episodes now. So it's been fantastic. I think we even sort of maybe pivoted a little bit once we started because we wanted to go in a more educational direction, and hopefully
Yeah.
the viewers at home have kind of enjoyed that as well. But yeah, I mean, any thoughts on how it's all changed for you, what you thought this monthly episode was going to be like, and where it's gone?
No, it's really good. I think we've developed it as we've gone. I think we get consistency with looking at the Bitcoin network hash rate, which I've had good feedback from the audience as well, saying it's nice to see that and get refreshed on it. It's not something that people look at every day themselves. So when the episode comes up, that's really nice. But yeah, definitely agree. I mean, obviously, when you start a new series, you don't know where it's going to go. And I've really enjoyed it being educational. Obviously, that's what we're about here at MiningStore, here to promote that mining's not for everyone, but at least you can know the benefits for it and understand if you are going to get into it, how to best approach it and what to be aware of. So always plenty of content to cover in this industry, Alex, and it changes every month. But yeah, looking forward to continuing on.
Yeah, yeah. No, mining is one that you can still learn a lot from and enjoy a lot about, even if you don't actually get into mining yourself, particularly with
Absolutely.
all your favorite altcoins that people don't realize how they actually work under the hood. But yeah, ETH2 is the big discussion, and my little theory on Ethereum Classic is starting to play out as well. We'll cover these FPGA markets that they kind of their own little thing that keep coming back and in vogue, and they're relying on alt season, so all that's pretty interesting as well. But let's go straight to that chart of yours where you've got out the pitchfork here.
Yeah, absolutely. So this is something that for the mining store members, they are well on top of. I track Bitcoin's growth at the moment using this pitchfork setup. So it basically comes from the lower point in 2018 to the higher point during 2019, 2020. And what tends to happen is we get these channels playing out, and they give me guidance as to which kind of channel that we're currently in. As you can see, since probably the PayPal announcement, we've just smashed through the lower channels and gone all the way up past through the midterm regression line, which is that red line. And then I've got a horizontal red line at the top as well, which is where I think that we've got, probably a harder support. I wouldn't say it's really hard. We definitely could push through that, but I think there would be a lot of buy volume, and it kind of tested to that around that 20-day moving average line is where I'm tending to see as we're having pullbacks. There's plenty of buyers in that territory. So it was an interesting month. Obviously, we played to, getting up to that 19,000, pulled all the way back to mid 16,000, even low 16,000, and then it just got bought straight back up, which is amazing to see. It's great stuff.
Yeah, you forget that we even had that, and I mean, I honestly think that we haven't gone hard yet, or we haven't had a crazy parabola. People have been distracted by different things. I still think it's all pretty healthy, and we're going to keep charging higher. Hopefully, even by the time you watch this episode. But this is another good one that's been floating around. The exchange balances, and I know particularly like miners and where the miners are sending their coins is also really important.
Yeah, exactly right. And it's what I've been using. I've been keeping an eye on this on a daily basis. I mean, since around that PayPal announcement and even before, like early this year, as soon as I saw exchange balances dropping, that's always a good indication for me that people have stronger hands. They're not putting it on exchanges. They're not willing to sell their, so to speak, bags. It does look like it's kind of bottoming out a little bit, but nevertheless, it's still on the downward trend. The trend's a friend. And if that supply is still getting shorter and shorter, that seems like a parabolic situation for me. So one other thing I wanted to tap on that just came to my mind before we switch from the other slide is I've really enjoyed the difference between mindsets from 2017 to now. I think it might be, Alex, because you've established a phenomenal community, and so have we, and we're surrounding ourselves with the right people and educating the right people now. But people are really more on the mindset that you don't have to pick the top and the bottom of markets. You can pick away at it. Always keep a good portion of your portfolio in your hodl position, and not try and overtrade. So I really want to promote that message. I don't want people kind of cashing everything out and trying to pick bottoms and tops. And I think that's something that I've seen go through your community recently as well.
Yeah, and I think a lot of people that are in the general crypto community or first-time investors have got a lot wrong this cycle, as well as people that have been in crypto for years because of
100%.
Because of just how strong and constant the growth has been. We're still seeing a lot of influencers and whatever talk about 30 to 40% pullbacks. There was 5 or 6 last cycle, but sometimes you've got to say, you know what, there's probably not going to be a pullback and it's not going to be easy. And I call that the no gentleman's entry, because everyone's trying to be patient and wait for that right time to get involved, and it just has left people in the dust. So dollar cost averaging, people that have been doing their own thing and sticking to the plan that we always speak about, or I guess miners that are constantly mining, they're in front at the moment compared to people that have tried to time the market.
Yeah, exactly. And on that point, like that's something that I've promoted to our community, that with mining, it is that kind of, it takes that trading psychology away. It puts you in a position that you make a capital injection, obviously, to pay for the miners. You do pay a power expense going forward, but you're constantly mining Bitcoin or whatever coin it is at different prices, and a natural kind of dollar cost average strategy over a long period of time. So yeah, it's good. People are getting more educated. People are, trusting this space more. And it's really good to see.
And have you got any slides on? No, you haven't. I might look that up in a sec anyway, but we'll go through this one. I want to actually look up what the miners are doing with their coins, if they've started sending them to exchanges or not.
Yeah, for sure. If you want to flick through when I'm going through something else, bring it up and we can take a look at it.
Yeah, sure. Yeah, well, you talk through the total hash rate at the moment. I'll let people have a quick look, and then I might bring up Glassnode on my other monitor.
Perfect. Yeah, so total hash rate, obviously last month, what we were looking at was a heavy decline. And the reason for that was largely because of the flood season in China. A lot of miners had to be reallocated and push up more towards the north of China. There was also a bit of power because of the flood season and the damages to some of the hydroelectrical plants. There was a shortage of power as well. So some facilities actually got cut off from power in the region that they were in. So a bit of commotion going on there, I suppose. We did see the rollout of the S19 Pros, which is Bitmain's newest Bitcoin miner at the 110 terahash miner. And so now we are starting to see the hash rate pull back up towards the 130 mark now. So on top of that, we obviously have Bitcoin's price going through the roof quite a lot. Bitcoin mining on the daily mining returns is up quite high. So I do expect by the time next month, I think it's very possible that we may actually head to that 140 terahash mark again. That's the highest that we've got. And at the moment, we're at about the 130. So the other thing that I wanted to tap on there was, I've been saying in each episode that, a lot of people look at Bitcoin miners and they're going, they're only just breaking even, or they might maybe making a little bit of a profit at the moment and not really understanding what the main advantage is. But right now, what we're seeing is, if you want to buy a Bitcoin miner, you are already paying 20, 30, 40% more than what you were 2 or 3 months ago. So these guys that have set up, and a lot of the guys in our community have already bought their miners. They're set up, ready to go. They've taken on a little bit of lower returns at that period, but now they're starting to see the fruits of that investment. And we'll look at that on the Bitcoin mining profitability chart as well.
Cool. Okay. I can't find what I'm after on my other chart over here. Sorry, guys, but that's okay. I think one thing that you do want to keep an eye on, it's always floating around Twitter and that as well, because it is part of the top tier of the paid services to actually get this latest data about what coins are going to exchanges, but particularly the miners. And those miners, they go through those periods of hodling a lot or then selling a lot. And recently we have seen them starting to send a few more coins to exchanges, as well as the old hodlers. So the coins that haven't moved for 2 years, all of a sudden they're going to exchanges. That data did help predict a bit of a dump, and yeah, that's sometimes on Twitter if you're lucky, and we'll try and talk about that as well. But they're the things you want to keep an eye on.
No, definitely. It's good to keep a track of that. I think like that's almost the main thing that these episodes are about, is not just understanding what Bitcoin's price is, but what actually makes it form to these. What are the fundamental reasons that it gets, stopped here or pushes down to XYZ price, and knowing where money is on exchanges and who's sending it is a really, really valuable piece of information. We might even, Alex, if you get the link and put in the description if you do find the chart.
Yeah, I've got it. I didn't realize you've got to be level 3 on Glassnode, and I'm trying to sign in on Sentiment, but I've got to go into my email. So, hey, I'll get organised next episode. But here we've got the mining profitability. Have you touched on this, Will? Did you want to add anything else?
Yeah, I'll jump through it quickly. So we did touch on it before when we were just saying when that Bitcoin halving came, you can see that indicated with the blue horizontal vertical line there. Back then, it looked like such a long shot before we got back into that Bitcoin profitability. But as you can see, we've broken well above that and sitting in quite a profitable position now. It's also important to remember that although the coins that were mined back then, they might have been on a break even or on a slightly profitable position, they mined those coins when they were worth $10,000, and most of them that are experienced would have been holding them and are now selling them at $20,000. So it does have a multiplier effect, I suppose, if you hold those coins. If you're mining at say $5 profit a day, but you sell the coins at 2 times the price, you do get that kind of 2 times effect as well. So really good to see that. I mean, I have a lot of respect for Bitcoin miners. At the end of the day, it's what floats the whole network when you really think about it. So it's good to see them earning a good profit and getting the fruits of their investment as well.
And do you have any thoughts, just off on a bit of a tangent, but long term, if the block reward keeps going down, and do you think like Bitcoin mining fees are going to be able to support the network, or if these trends like Bitcoin's going to Ethereum or second layers and all those sort of things, it's a long way off, but are you worried about it?
No, I don't think I'm worried about it. I mean, there's a lot of factors that determine profitability. So obviously the reward you get is one. And at the end of the day, I feel like we will always reach market equilibriums. If price shoots through the roof, then more Bitcoin miners will turn on. If price falls to the floor, then Bitcoin miners will turn off. If the reward is not covering what the Bitcoin miners are earning, then they're going to turn off their miners. So I think there's a substantial amount of network hash rate on the network. So it's more than secure. So basically, I'm not too worried about it. In 100 years' time, when all the Bitcoin is mined and we're going off transactions, I mean, who knows what's going to happen in 3 to 6 months, whether we're in 100 years. So I couldn't really comment on it. But the one thing I can comment on is the way that Bitcoin has evolved over time has always found a way to make everyone happy, so to speak. So I've got a lot of confidence in how things will play out, mid-term, long-term.
Yeah, even if it's a hard fork, I guess you could argue that's how you keep everyone happy. But onto the FPGAs and some altcoin mining.
Absolutely. There's one slide, I think they're just before FPGAs, which is just some Bitcoin profitability, which we've been looking at in previous episodes as well. So always good at in these episodes just to bring that up and give people an idea of how things are going. Obviously for zero power cost miners, you're looking at around about a $10 revenue per day is what the Bitcoin miners are getting, which as I said is really nice and in that profitable zone now. That's with the 110 terahash miner, which is the newest Bitmain release. This is probably one of the only miners that there is stock available of at the moment from what we're experiencing. It is available, but every day that Bitcoin's price is going up, our supplier will give us a message basically saying it's an extra $200 per miner. So for people that are kind of thinking about it, you need to make the decision. You don't need to rush into it. As we always say, mining is not for everyone, But if you are thinking of setting up a Bitcoin mining operation, you need to think about it before we start to get those parabolic highs. One, you won't be able to get miners, or you'll be paying out of the floor for it, just to get your hands on one. So that's always good to see. Obviously, the other side, if we want to go to the next slide, Alex, or did you want to comment on that at all?
Yeah, no, I think it's just funny, isn't it? How they're mining this thing that's so valuable, and the price can just go up $100 a day of the actual miner.
It's ridiculous. I mean, we've had some people, some of our larger clients look to put in orders, and we've said, "Yep, price is all good." Next day, get a message from the supplier saying, "Oh, they're $200 or $300 more," and we just got to be honest with them. Just say, "Look, just wait. It's the exact same as trading. You don't want to buy in when it's just gone up 50%. Just wait for it to come back and things normalize a bit." So, yeah, just be smart. If you're not going through MiningStore and you're purchasing your own miners and you're finding that situation, just don't get rushed into things. They will try and push you into things sometimes.
And similar situation with the FPGA. So they kind of have a second life once the price starts moving around, and when there's not as many new coins coming online, and this, that, and the other.
Yeah, exactly. So what we're seeing with the FPGA miners, obviously right now we are in a major coin market. BTC's dominance is at nearly all-time highs, sitting at around, I think on that chart it was 60%, is it, Alex?
Yeah, thereabouts, yeah.
Around about 60%, and Ethereum sitting high too. So what tends to happen in these markets when major coins are kind of taking all the fun, so to speak, away from the altcoins, is we don't see new projects coming up and about. We don't see projects like CKB trying to outperform Ethereum, or Handshake bringing out all these exciting things. And what tends to happen with the FPGA miners is their profitability will reduce quite a lot, down to $1, $2, even break even, or can be less at certain points in time. And what we tend to see happen then is the price of those actual miners goes from being from $4,000 a miner to $3,000 to even $2,000. So we all know, or we should all know by now, that markets and investors are not usually rational. And what tends to happen here is our larger miners are actually purchasing these secondhand miners off other people, and newer miners are also purchasing these secondhand miners at much lower prices than what they were, just because returns were higher. So as a smart investor, I always encourage people to have a look at it. If you have faith that the altcoin market will come back around and new projects will start popping up and there'll be proof of work projects, I would say this is a pretty good opportunity to tap into that secondhand market and look to start purchasing those FPGA miners that people are looking to get rid of. So that's what we're seeing at the moment with FPGAs. Returns are definitely slower. You've got to have a strong gut if you are going for that strategy. You've got to be comfortable with having lower returns now, but getting cheaper hardware at that point in time.
It's such a big tactical game, and I'm sure there's experts out there that just love trading this stuff as much as actually trading the coins. Particularly all the GPUs, like the graphics cards back in the old altcoin cycles and seasons. And that was another thing that we didn't mention, but I know the new range of, was it AMD or NVIDIA cards, like there's been some crazy new cards come out that I think have got specs specific for mining Ethereum or crypto?
Yes, so I know the latest card that came out was the 3080. I'm looking at one right now. I did manage to pick one up. It was crazy what happened with that. They barely made enough, and people are struggling to get them. I don't know why they wouldn't make more. Surely they were going to get demand. But there has been kind of settings on them that does make it more efficient for mining, which is good to see. Probably not as much as we saw in 2017 when we started seeing motherboards being created specifically for GPU mining. A lot of the mining profitability has moved towards ASICs and FPGAs now. For anyone kind of doing this on a larger scale, including ourselves, we're doing this with larger FPGA and ASIC farms. But there is still definitely the capability on those GPUs. And to be honest, right now, they're doing bloody well on Ethereum. I mean, Ethereum, when the gas prices go up, those GPU cards can be earning quite a substantial amount in a day.
Absolutely. And everyone's going to need a good GPU card once they start going to, Decentraland and playing all these crypto games and stuff. So plenty of reasons to have good graphics cards laying around.
No, there certainly is.
Here are those fees you spoke about. So it's been such a fine line. And like even with the Bitcoin fees when it was really busy, it's almost like a filling up. A little bit too much water flowing in, and all of a sudden it gets very full. As soon as you meet that equilibrium, and it more so, it starts to empty, and we see that all of a sudden gas fees on Ethereum will be 10, 20 gwei, and it'll only cost you 20 cents maybe to send a transaction. Next minute, markets are moving, all the smart contracts are getting smashed, and everyone's using it, and just goes, whoop, 500 gwei, costs you $5, $10, $20 to send a transaction. It is just nuts at the moment.
It really is. I think the perfect example of that was when Uniswap released their token, and everyone's just trying to claim this token, and some people are mad rushing trying to sell it. They've made $2,000 without doing anything, and that's a perfect example of that bath just overflowing and gas prices just go through the roof. I'll be completely honest, this Axion coin AXM, which has 83% of the volume, I believe it's like a change of the Hex coin. Is that correct? I'm not sure if you're up to date with it.
Oh, possibly. Yeah, I think I did see that, but
I'm not really onto it. I've never paid a minute of my day's attention to Hex, so I wouldn't bother. But nevertheless, that seems to be what has caused the recent huge amount of volume on Uniswap, and hence pushing up gas prices, along with, of course, Ethereum trading nearly at all-time highs. People are moving around their coins trying to sell and buy. There's more trading volume going on. So always good to keep an eye on those gas prices. I think, Alex, I'm sure you get the same message from your community every time gas prices go up. People saying, "Oh, I sent a transaction an hour ago and it hasn't arrived," and all this congestion tends to occur. So just another good thing to get people aware of. Just have the resources to go and type in gas prices and look at the gas station, and just have a look if you're noticing these things, and understand how the transactions work and how the smart contracts are working.
Yeah, I think I put the link to the tutorial on blockchains down below in most episodes. And so the one that shows the Ethereum transactions and gas prices and all that will explain why your transaction is stuck, how to replace it, and all those kind of things as well.
You don't need a message, Alex.
No. Okay, so the ETH network analysis. We had the successful launch of ETH2, and there's a lot of confusion out there, including people in the know like Will. So even myself, I mean, it just changes, and a lot of the later phases aren't even set in stone. So when people are confused and asking questions, that's completely understandable. So Will, what was your understanding? What were things did you still have questions about? And then I might run through this sort of chart.
Yeah, it is exactly like that, Alex. I mean, obviously, sometimes we beg for really clear answers, but at the end of the day, this is blockchain. This is new technology. This is breaking grounds that hasn't been touched before, and I think we do need to respect that and be mindful of it. And it's much better to have a slower process with a bit of uncertainty than a rushed process that just collapses the whole ecosystem. I can guarantee anyone that's holding cryptocurrency out there and hoping to make some money off it, or you might be using it for other purposes, you don't want this Ethereum 2 swap to be a rushed one. So I mean, on that note, what it means for the mining side of things, what we've seen obviously is the commitment has been reached, which is awesome news. Alex, you mentioned that you were very confident it's going to happen, and absolutely it did happen, and almost doubled the commitment that was needed. From here, that means that ETH2 will go ahead. We will move towards a proof of stake environment or ecosystem. And basically in between that time, between now and when ETH2 is fully launched and it's all proof of stake, there's going to be a hybrid situation occurring. So the ETH1 blockchain will still exist, proof of work mining will still exist, and slowly but surely that will be phased out and moved towards full proof of stake. Now, from my understanding, the time that's going to take to happen, and when ETH1 could be or will be fully phased out, could be between 1 to 2 years. And relating all of this back to mining, what that does mean is you will be able to mine using Ethereum miners. And in the next slide, we do have an example of one of those miners. You will still be able to mine on the Ethereum blockchain and benefit. So before I jump into that mine, Alex, do you want to comment anything there? There's probably a bit of information there, and and you've got some experience on that as well.
Yeah, well, I guess I definitely recommend everyone watch the documentary that we put out with Real Vision during the week. So a lot of that is about Ethereum 2.0. But on the slide here, you can see that as always, Ethereum make things particularly confusing. So there's 4 phases, but they're not called 1, 2, 3, 4. So phase 0 is what happened the other day, and that's just saying, okay, we're launching a new blockchain, and it's called Ethereum 2, because doing this upgrade was just going to be too much of a challenge. You can't coordinate thousands of projects now and all these tokens and contracts to upgrade as you upgrade, particularly if something goes wrong. So they said, you know what? Let's just start the new blockchain and then we'll merge Ethereum as it currently stands and this new Ethereum 2 once we're ready. And so what happens at the moment, all we have is just a very basic blockchain, the beacon chain as it's called, and it has a deposit contract. And all that happens is people can deposit in there and we get all the validators and they start producing blocks. So the proof of stake mechanism is kind of functioning, but nothing's happening. There's no dApps on there. You can't even send coins to each other or anything like that yet. It's just very basic. Let's make sure proof of stake works. Now, the next thing that happens is they split the chain up into 64 shards. So that's the next thing that's going to scale the network, and that's really important. So at that stage, we've got proof of stake and sharding, and then 1.5 is when we make the old Ethereum chain one of those shards. So that's when the two will kind of like merge together, and that's when proof of work would finish.
Yes, yes, correct. When proof of work should probably phase out and we'll move towards proof of stake. So that's a perfect explanation. It clears it up in my head even a little bit, but I've been trying to follow it along with everything else that's going on. And there's not too much like really clear, clarity on the timeline. There is on what's going to happen, but it just might take a little bit longer between periods. But just to recap that there, for anyone that is buying Ethereum miners, you will still be able to mine. Don't think it's going to turn off tomorrow. To be honest, I actually think in the ASIC market, this is one of the miners that could well be. A lot of people will shy away from it because of the risk that it eventually will turn off. But I think this is one that people are actually going to do quite well on. We're definitely getting quite a few of these miners. The latest one that's going to come out, and it's not out just yet, it should be out in December, is on the next slide, is going to be the A10 Pro, the Ethereum miner. It's going to be 720 mega hashes. To put that into perspective, the GPU miners that we were building in 2017, each card would only have about 28 to 30 mega hashes on the network. So substantially more powerful, more compact, probably a lot cheaper for the amount of mega hashes that you're getting. So I dare say I don't think that the GPU miners will be able to keep up as easily. But nevertheless, the ASIC miners looking like they're the top miners on the market that you can get at the moment, and they're looking like they're going to be pretty good, to be honest.
The other thing to add there was, I guess, the theory I floated about Ethereum Classic. So, a very long story short, Ethereum Classic was like the minority fork that everyone didn't really think was going to exist until it got listed on Poloniex, and Barry Silbert and Grayscale kind of got behind it, and a very small group of devs, and all of a sudden there was a lot of like hype, and that gave it more of a price. And since then, barely anything's happened on Ethereum Classic in 3 years. They ran out of money. They ran out of devs. If Grayscale and Barry Silbert didn't hold massive bags of this and have an Ethereum Classic fund, I'm sure it wouldn't even exist. But one thing that I've always thought that they were going to wait for was this big transition, because all of a sudden now all the miners that have their graphics cards that want to keep mining Ethereum, they can start to say, well, come over and mine Ethereum Classic. And all those people that have a huge vested interest that have outlaid millions of dollars of capital, they might all start cheering and chanting as well and saying, Ethereum Classic's the real Ethereum. Now, those guys also own CoinDesk, so the media might get behind that as well. So I'm really waiting to see what sort of games and funny business happens here with Ethereum and Proof of Stake and the old Ethereum Classic, if it can make a comeback.
No, it's really good to pick up on those things, Alex, because I think like you and I would probably agree that, I'm more of an Ethereum lover and I think it's just a fantastic project. But nevertheless, it's back to that irrationality that happens, and you've got to understand who's behind, media and who can control it. That's what can affect price so much, and it can change. We've seen scam projects in this space turn into some of the biggest projects that are out there. So you never know what can happen. I'm actually really glad to see Ethereum Classic make this fork that will save some of those GPU miners. They do need a place to go. And I think in a previous episode, I was saying to yourself, look, I can't, in my mind, conceptually understand how someone can take advantage of all this hash rate that's going to be available. But this is a perfect example of it. They can gain a lot of support. They can gain a lot of traction by simply, accommodating for that hash rate on the market. So you're definitely bang on there, Alex. It'll be a really good one to see it play out. And I'm sure at the end of each episode, or even at the beginning or the middle, wherever, we'll be able to tap onto what's going on there.
Yeah, sorry, I hadn't even got to that slide on yet for people at home. But that's a final piece of everything we just spoke about. They've actually gone that extra step, and they're making a hard fork to make these GPUs even more usable or sustainable, which is almost, it is giving absolute credence to my theory. That's the only reason they are doing a hard fork, is to get all those miners over. So, hey, it's all another theory comes true, and now maybe Ethereum Classic is worth a bit of a swing trade as well. There's an idea for you.
Yeah, definitely. It's funny that they're calling it Thanos, the one who wants to take over the world.
Oh, there you go. Well, I didn't know that. So far out, all my conspiracies are coming true. Well,
he's getting all the gems.
It's been awesome as always, Will. Any final thoughts? I've got to run to another interview in a second.
No, not at all. Always good to jump on board. And obviously just, that warning out there, as well as opportunity out there for people that are looking to get into the mining. Just make sure you do the research first. Don't just jump on the highest returning miner. Get in touch with us if you need to. We always offer kind of 30-minute free calls if you need to give us a call. But other than that, everyone, safe trading, and hopefully we see some exciting Bitcoin action for the next episode, Alex.
Yeah, we might try and squeeze in another episode before the end of the year. I'm not sure. But maybe some mining gear as a Christmas present. We might try and do like a year in review, or maybe a look ahead or something like that. But looking forward to taking this episode to bigger and better places again next year. And man, 2020, what a year. I mean, it's crazy that it is December. Like, I just never stop and really think about anything. I just go day to day because there's enough happening.
Oh, 100%.
But here we are approaching Christmas.
It's crazy stuff. It'll be a year again before we know it.
Cool. Okay, thanks, Will. I hope you enjoyed that one, guys, and we'll talk to you again soon. Cheers.
Take care. Bye.